Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. First of all, happy season's greetings to my Christian brothers and sisters out there as you celebrate the Easter holidays, and of course, I'm excited to welcome you all to yet another promising edition on the Forex Morning Mastery, your daily dose of financial insight and trading strategies. So today is the first trading day of the week, the first trading day of the month, and happy new month to you all. Today is going to be a promising session as we will be looking forward to see how the market participants are going to be preparing for the new month. And of course, the month of March was one of our most profitable month in recent times as we took advantage of the weakness in the US dollar, especially on the gold asset, as we rode that asset all the way to an all-time high. And it appears price will continue to climb to the upside. We are going to be looking at that in a moment and see how we intend to position ourselves for the next move. For this week, I have three financial assets which we will be looking at, which includes the US All Spot, the USDJPY, which we will be doing a follow-up on. Remember, last week we really did not see any significant traction on that asset as every move will keep coming back into our entry point, giving us an extended sideways trading activity due to the uncertainty in the market at this point. So we are going to be looking at how we will be positioning ourselves for the next move on the USDJPY. And then finally, we are going to be having the XAUUSD, which is my favorite asset amongst them all. So we are going to be looking at that in a moment. So I encourage us all to stay tuned in so that we do not miss out on the valuable ideas we will be deliberating on today. And during the course of the weekend, I was able to only publish one asset, which was the XAUUSD. So in that regard, we are going to be doing a top-down analysis on both the US All Spot and the USDJPY today. So it's a rare opportunity where you have the privilege of seeing how we mark out our charts from the higher time frame all the way down into the execution time frame. So you do not want to miss out on this session. So I encourage us all to grab our favorite beverages, biscuit, what have you, and stay tuned in. For those of you who are joining us for the first time, you are highly welcome on board, and I'm very, very excited to have you around with us this morning. And I do know you will be what we are doing here on the Forex Morning Mastery. Well, following my weekend videos as technical traders, we usually gather here on a daily basis with the utmost intent of trying to understand how the market participants are behaving, and of course using that information to strategically position ourselves for the next move. So the Forex Morning Mastery is an avenue where we prepare ourselves for both the London and the New York session. My aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually be able to use this information to make your own independent trading decisions. So once again, I welcome you all on board and encourage you to actively engage in the comment section. And please do not forget to click on that like button as the session goes by. So with that being said, here we shall be diving right into the business. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that is likely going to be influencing the sentiment in the market today. And to do this, we usually run into the economic calendar, where we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we are going to be looking at for this week, we will be focusing on high impactful events from both the United States and the Japanese economic docket. Now, for this week, what I did here this morning, after looking at the economic calendar and due to the absence of many high impactful events, I had to include the mid-tier economic features so that we can have a broader view into what the market participants will be looking forward to today. Now, if you look at the economic calendar this morning, we already have some events that have happened from the Japanese economy. That is the Tankan Large All Industry Capex, the Tankan Large Manufacturing Index, and of course the manufacturing outlook. Now, this data here gives us an insight into the health condition of the manufacturing sector of the Japanese economy, and it's usually seen as an indicator of how strong and healthy the Japanese economy is. As we all know, the Japan heavily relies on the manufacturing industry that leads to growth for export-oriented economy. So a result above the zero level is seen as positive or bullish for the Japanese yen, where a result below zero is considered as negative, resulting in negative traction against the Japanese yen. Now, if we look at the data here, the Tankan Large Manufacturing Index is what I'm talking about here. You will see that the consensus was projecting 10 as against the previous month, which came in at 13. Now, the data, the actual figure that came in this morning was a little bit more than the market expectation. It came in at 11, giving us a positive deviation of 0.58. But one thing here is that it was a lower than the previous month. So it shows that there has been some contraction in that sector, though it's still looking promising since it's still above zero mark, is above the zero mark. So it still shows that the manufacturing sector is doing pretty well. So we're going to be looking at how the market participant had reacted to this, to the Japanese yen, especially on that asset, the USDJPY, which we are going to be monitoring for this week. Then moving on, today we are going to be looking forward to the manufacturing PMI from the United States economic docket. This is going to be coming up in about how many hours from now? I think about 5 hours from now. We look forward to the ISM manufacturing PMI, which is the major highlight for today. And for those of us who do not know, this is a key economic indicator that measures the performance of the manufacturing sector in the United States. Now, it has a scale of 0 to 100, so a reading above 50 indicates expansion and can positively impact market sentiment, reflecting a healthy and growing manufacturing sector. Now, if we look at the previous data for the ISM manufacturing PMI for the month of February, it came in at 47.8. Now, this is a little bit lower than the 50 mark, which is the barrier between expansion and contraction. So it showed that last month the sector was not really doing very well. And from what is on ground right now, market is expecting a 48.4 for today, and which still gives us a signal that the manufacturing sector is not really pushing as expected. So we look forward to see what the actual data is going to be like. Are we going to be seeing surprises today, or will the data come in just as expected, below expectations, or even beyond expectations? Then we also have some mid-tier economic feature, which is more or less like a reflection of the ISM manufacturing PMI, but our focus is basically on the ISM manufacturing PMI coming up in about 5 hours from now. So I encourage us all to mark out this timing on our calendar, as we do want to be on standby to capitalize on how the market participant will be reacting to this event. And one thing for sure we know here is that the anticipation of this event has a way of influencing how the market participant will be behaving ahead of this event, which obviously will reflect on the chart as price action. Now that reminds me, I also want to emphasize here that today happens to be a public holiday, the observance of the Easter Monday, and this may likely result in subdued trading activity. So we need to take this into consideration as well. While we review the current market structure, we may see an extended sideways trading activity, which could evolve into a setup pattern or structure that we can use to guide ourselves for the remainder part of the week. Now, I also want to emphasize that we have series of high impactful events that we are going to be looking at for this week, like the ADP employment change, the ISM services PMI, the average hourly earnings, and of course the almighty non-farm payroll. Then we're also going to be looking forward to the Fed chairman's speech, which is coming up later in the week. That is one event everyone is looking forward to have an insight into the trajectory of the interest rate decision for the Federal Reserve. So besides this, we are focusing on this one today. So let's go into the chart and let's see what is going on in the market and how we intend to position ourselves for the next move. Stay tuned in, guys. So the first asset we are going to be looking at this morning is going to be the USOILSPOT. Now, since I did not share any video on the USOILSPOT during the weekend, so what we are going to be doing today is to do a top-down analysis on this asset with the utmost intent of understanding or having an holistic perspective into how this market has been behaving. So what I did here on the USOILSPOT was to start my analysis on the 4 hours time frame, and here on the 4 hours time frame I took into consideration the character of market participant or of price action since the beginning of the month of March. And if you do this correctly, you will see that price action has been bullish throughout the month of March, giving us a couple of ascending trend line to emphasize the strength of the buyers here. So I have a couple of ascending trend line here after connecting the series of high and lows. So this is the major trend line we are going to be using for this week. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall feel comfortable in a buy position and obviously look out for more opportunities to buy. Now, before we go into the technical details here, it is important for us to also understand the fundamentals, that is factors, the various factors that have been influencing the markets, the price in the market behind the scenes. Now, the upward trajectory of oil prices have continued. In fact, this morning while I was looking at the chart, I saw that the uptrend, the bullish momentum is still persisting at this point, and this is going to be the third consecutive session this will be happening. And this sustained gains in the prices of US oil can be attributed to anticipated supply constraints resulting from production cuts by the OPEC Plus members. Remember, I talked about this last week where OPEC Plus have decided to push further into the next quarter their production cuts, hereby affecting the supply chain in the global market, artificially trying to push price to the upside. So investors at this point will keenly be directed towards the upcoming joint ministerial meeting of the OPEC Plus, which is scheduled to happen for this week. I think it's coming up on Wednesday thereabout, as they will want to listen or wait for the outcome of that meeting before making any informed decision. And this may likely result in extended sideways trading activity due to uncertainty waiting for this event to actually happen. Expectations are widespread that during the meeting, OPEC Plus will evaluate market fundamentals, member adherence to production target, because there are some members in the OPEC Plus who are not really aligning with the directive of OPEC Plus. So we'll be checking on that, and with most anticipating the continuation of current output policies. Additionally, Ukraine drone strikes have significantly impacted the Russian refineries, resulting in reduction in Russia's fuel export, hereby affecting the supply chain in the global market. And we all know how Russia is one of the top suppliers of oil in the world. Now, these strikes have rendered nearly 1 million barrels per day of Russian crude processing capacity inactive. Now, this is a very high figure you are looking at here, and imagine what that will be in the market. So for me, the path of least resistance is still looking very bullish due to the supply concerns in the global market. Now, in addition to all of these various factors supporting an ascent of oil prices, is the official data which was released by the Chinese manufacturing sector, which showed an expansion for the first time in 6 months. Now, this for me is a positive development, enhancing the outlook for crude oil demand, considering China being the world's leading crude oil importer. And if the Chinese economy is doing very well, it's a glimmer of hope for buyers of USOILSPOT. And from all these various factors, it's a clear sign that the path of least resistance for oil is to the upside. Now, the question going into the new week is, what path will this uptrend situation take? Are we going to see some profit-taking activity happen first in such a way that price may probably retrace back into the ascending trend lines, or any of them to continue the uptrend move, or even break down the structure? Or how are we going to be seeing a form of uptrend continuation pattern around this area at the $83 area before the trend continuation happens? So this is what we are going to be looking at when we scale down into the 1 hour time frame. Now, to guide our trading decisions for the week, I have a couple of more levels identified on this chart, and the most important one here is our key level for this week, which is at the $82.50 level. Now, if you look at this level here, you will see how it has played a significant role in determining the direction of price action in the last 2 to 3 weeks. Now, this, let me show you what I'm trying to say here. Now, if you look at this area in the mid-month of March, we saw how this level was serving as a selling niche. We saw the breakout of the structure here. We saw price came back to retest the structure, making it a buy zone. Then we saw a little bit of consolidation around this area, resulting into a reversal setup, giving us that privilege to join that uptrend move we took advantage of last week. And we can see how the $82.50 level continued to become a demand zone since the breakout of that structure happened. So you would agree with me that this level here is a crucial point. So are we going to see price action drop back into this level again before the uptrend happen? And if we look at the distance between where price action is right now and this point, it's running into about 185 pips. So I do not want to miss out on that if that is going to be the case. Then, in addition to the key level, is the highest point price action has been for this week, which is the $83 area. And this level here is going to be serving as a resistance of the structural pattern we have on the higher time frame. Look at what happened here during the mid-month of March. It was a selling niche, and last week we saw how price action came back to close around that $83 area. Now, are we going to see a reversal pattern here to incite a downtrend move, maybe back into the ascending trend line? Or are we going to be seeing a reversal, an uptrend continuation pattern that will break out of the resistance line? So in order to understand the character of market participants, $83 area, we shall be scaling down into our execution time frame, which is the 1 hour time frame, to see how market participants have been behaving since the beginning of this week. Now, when we scale down into the 1 hour time frame, we begin to see things more clearly. Now, this was what I was able to come up with right here on the 1 hour time frame. Though the week started on a strong bullish momentum, as you will see, price action started around the $82.60 level, and you will see that as soon as price got into that $83.15 area, we saw a barrier, and the inability of buyers to break out of the structure, for me, is a sign that sellers are still very strong around this area. And if you remember what I showed you earlier on the 4 hours time frame, how the $83 level, as at one point in time during the mid-month of March, was serving as a selling niche as well. Now, with this situation here, we have a range-bound structure where price action is confined within the $83.15 level and the $82.60 area to emphasize the prevailing uncertainty going on in this market right now. And you know how we do it when we have a range-bound structure like this. We want to exercise patience, waiting for price action to either break out of the resistant line of that range to give us an opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. So with the situation we have here, we have no other choice than to exercise patience and wait for price to either break down the support line. So in that regard, we will be having a sell stop order sitting below the $82.60 level to capitalize on the downtrend move, and a buy stop order above the resistance line at the $83.50 level to capitalize on an uptrend move. So this is a simple setup we have here on the US All Spot, as our center of focus today is going to be between the $83.50 area and of course the $82.60 level. So let's strategize our entry point around the structural development we have on the 1 hour time frame. So this is my simple view on the US All Spot for today. If you have any questions whatsoever, feel free to let me know in the comment section. So if price drop, I already have my sell stop order triggered at this point in time. So let's see how far this bearish momentum will go. Will it get to the $82.50 level, which will be dovetailing to about 185 pips thereabout, or will it even go further to break down, or are we going to be seeing a reversal setup around this area to join that uptrend continuation? But trust me, I will be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. So this is my simple view on the US All Spot for today. If you have any questions or you need some further clarifications whatsoever, feel free to let me know in the comment section. I'm here and willing to be of help in that regard. So as usual, I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the next asset on our watch list. So stay tuned in, guys, while we wait for your questions and inquiries. See you soon. All right, so I see your question here. I see you, ITK Investment Trust Knowledge. Good morning to you. Glad to have you around with us. Happy Easter to you too as well. And I saw your question before you actually retracted it, but it's okay. I will answer your question, don't worry. You are asking that what is the appropriate amount you want to that one can invest in trading. So what I think you mean is, what is the appropriate portfolio size that is reasonable to invest in trading? I guess that's what you're trying to say there. Well, personally, there are a lot of factors that can influence this idea. And one of the things I usually consider, I have various factors which I do consider: buffer for drawdowns, position sizing, and of course risk management, which is most important. Now, if you have a higher amount in your portfolio, you can better manage your risk, as it allows for more flexibility in setting your stop loss and take profit target, ensuring that each trade risk is smaller percentage of your portfolio size. Now, in terms of position sizing as well, which is in line with risk management, a larger account allows for more effective position sizing. You can trade larger lots while still keeping a reasonable percentage of your account size in a trade. Now, let me give you a pragmatic example to make things a little bit easier for you to comprehend. Now, let's compare one who has a $100 account size to one who has a $1,000 account size. Now, for one who has a $100 account size, it will be difficult for that person to be able to take the same position as the one who has a $1,000 account. Now, let's say, for instance, one who has a $1,000 account, who is willing to risk 1% of his account size, that's about $10. He can afford to place a $100 pip stop loss, 100 pip stop loss on a particular trade. And at the end of the day, if the trade goes against him or her, he will have risked only $10 of his account. Now, for one who has a $100 account, who wants to risk 100 pips and risk 1% of his account size, this is not going to be possible. So this is what I was trying to explain there. So the larger your portfolio size, the easier for you to be able to, the more flexible it is for you to set your stop loss and TP target. And this also allows a higher portfolio size, also allows a buffer for drawdowns too as well. So you can easily take 3 losing streaks at once, because there is no way you will not have losing streaks. Of course, you will be able to take losing streaks so that you can be able to bounce back and then go back into your profitable position. So if you would ask me, I would suggest that a minimum of $1,000 account seems most appropriate to do that. So $1,000 account seems more reasonable to start investment in trading, while you risk about as minimum as possible. It's subjective anyways, but I will suggest a 1% of your portfolio size will be good for every trade on a $1,000 account. So I hope I was able to clarify that ITK Investment Trust's knowledge. I hope I was able to clarify that. If I didn't, please let me know. I will expatiate further on that. And my name is not Dami, my name is Sheriff Daramola. It's not Dami, all right? Okay. You're welcome. You're welcome, ITK. So in the absence of no further questions, I want to assume that we are all on the same page on this one. Okay, you're very much welcome. So let's move on to the next asset on our watch list for today. Stay tuned in, guys. Wonder why. Okay, so the next asset we are going to be looking at today is going to be the USDJPY. So we are going to be doing a follow-up on this asset. Now remember, last week we were not able to take some significant amount of profit on this asset last week, as trading activities was more or less of a range bound pattern, as price action was confined within a specified range, further emphasizing the level of uncertainty in the market. And as at this morning too as well, the Japanese yen remains in a sideways consolidative pattern, reflecting the cautious stance of the Bank of Japan and prevailing risk on sentiment in the market right now. However, fears of intervention to prevent excessive Japanese yen depreciation constrain further losses and cap any gain in the USDJPY. Now, despite the weakness of the US dollar driven by the sticky inflation, remember last week Friday we saw the US CPE data, which is considered to be one of the preferred inflationary gauge for the Federal Reserve, coming in a little bit higher than expected. And this is a reflection that inflation is still sticky in the United States. Now, this is contradicting the idea that the Fed policymakers are planning to cut interest rate by 75 basis points for this year. Now, with sticky inflation, I doubt if that idea of cutting interest rate will maintain its ground due to this situation here. So we have a dichotomy in the market where we have two sets of beliefs in the market right now, where some believe that the Federal Reserve is going to cut interest rate, and while the other half is thinking that Federal Reserve will maintain interest rate higher for an extended period of time. So with this concerns over potential government intervention by the Bank of Japan, we have seen an indecisive phase in this market, and it appears that with this whole indecisive situation we have, price action is gradually evolving into a predictable pattern that we can actually use to guide our decisions for this week. But we should not forget that we're still looking forward to some high impactful event from the United States later in the week, like the ISM manufacturing PMI, the non-farm payroll, the Fed chairman's speech, which is coming up during the midweek, and of course the average hourly earnings, all of which will be giving us an insight into how well the United States economy is doing, and of course the inflation in that economy. Now, with all these fundamental factors behind the scenes, let's take a look at what is really going on from an holistic perspective. Now, to do this, we would like to scale up into the higher time frame, and to start my analysis for this week, I focused on the 4 hours time frame. And right here on the 4 hours time frame, what I did was to take into consideration the character of price action in the last 2 to 3 weeks, and it's quite obvious that price action has been bullish, as you will see, since on the second week of the month of March. We saw this strong impulsive move to the upside, and as soon as price action found a new high at the 151.800 for this year 2024, we have seen multiple rejection of that level, giving us a sign that buyers are finding a barrier around that area, and this simply means that sellers may likely be getting stronger to push price to the downside. And if we consider the potential intervention of the Bank of Japan in the forex market, we may likely see a crash happen from this area. Now, if we look at the structure this pattern has formed, it has formed something that looks like an uptrend continuation pattern, where the breakout of the 151.800 could incite an uptrend move. However, we cannot ignore the potentials that sellers can also come into, where the breakdown of this ascending trend line could be all we need to continue to join a move to the downside. Now, to guide our decisions for this week, we have a key level around the 151.200 area. So let me zoom in so we can see what is really going on here. So you can see we have a range bound structure already, and when we have a range bound structure, we want to exercise patience. waiting for the market participant to finally make a decision for us to join, which obviously will come either in the form of a breakout of the resistance line for buying opportunities or the breakdown of the support line for selling opportunities. So with our key level at the 151.200 area, which interestingly shares a confluence with that ascending trend line, we shall see if this level will be broken to the downside. So for me to sell the USDJPY for this week, I would rather want to see price breakdown, retest both the ascending trend line and the key level at the 151.200 area to join the downtrend move. However, if price action remains above the ascending trend line, then we will be looking out for patterns and structures that will support the idea of buying this asset this week. So with this information we have gathered here on the 4 hours time frame, let's scale down into the 1 hour time frame where we begin to see things more clearly and of course see how market participants have been reacting to this confluence we identified here on the higher time frame. Now scaling down into the 1 hour time frame, we begin to see things clearly, and what I was able to come up with this morning was a range bound structure. As you will see here, since the new week began, price action has been confined within the 151.435 and the 151.225 to emphasize the prevailing uncertainty in this market right now. And you know how we use our range bound structure whenever we identify them on the chart. We exercise patience, waiting for the market to make a decision, which will come either in the form of a breakout of the resistance line to give us an opportunity to buy. In fact, it's looking as if price wants to continue to the upside, considering the fact that price still remains above the ascending trend line and that key level at the 151.200 area. So it's looking as if price wants to continue to the upside. So I do have a buy stop order sitting above the 141.435 area, hoping price will continue to the upside. And if it does, remember to always have your stop losses in place. Anywhere below the ascending trend line seems most appropriate to secure this position. So that will be dovetailing to about 15 to 20 pips thereabout, depending on where your entry point is. Now, if the contrary happens here instead and price drops to the downside, maybe the Bank of Japan intervenes this week, which is very likely due to the reiteration of the Bank of Japan's officials as regards to intervention. If that is going to be the case this week, we may likely see price break down the support line and the key level at the 151.225 and the 151.200 respectively to incite a bearish idea. So it's a simple setup we have here on the USDJPY, where our center of focus for this week or for the first half of this week is going to be between the 151.435 and the 151.225 area. So I encourage us all to mark out these levels accordingly on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions before we move on to the next asset on our watch list. So looking forward to your inquiries if you have any, and you can as well use that time to mark out those levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. If you're yet to give the video a like, give the video a thumbs up, please do. You will be doing me and the community a whole lot of favor by doing so. If you are yet to click on the like button, please do so. If you have found this content helpful and useful in making your independent trading decision, kindly give the video a thumbs up, and thank you very much as you do so. And for those of us who had already liked, you guys are wonderful. Thank you very much. I see your comment. All right, it's okay, it's okay. It's okay. ITK Investment Trust Knowledge. All right, so in the absence of no questions, let's I guess we are all on the same page, so we shall be moving on to the final asset on our watch list for this week. And please let the like tally with the number of people on board. We're having over 10 people on board right now. Let's make the like tally with the number of people on board. Thank you very much, guys, as you do so. So moving on to the final asset on our watch list for today. So the final asset on our watch list for today is my favorite asset amongst them all, and that is the XAUUSD, popularly known as the gold spot. And as it is network there, is it so? Okay, I think the network is right back on. Please let me know in the comment section if you can still see and can hear my voice. Please let me know so that I can do the necessary adjustment if you didn't. Okay. So, like I said, the XAUUSD is at all-time high right now, and price action. I missed out on this opportunity, to be sincere, as I was fast asleep when this whole movement happened. But when I woke up this morning, I was able to identify a trading setup that we can use to guide our decisions for today. And for those of you who are with me on both my TradingView and Telegram platform, you must have gotten an update as to how we are going to be managing the positions today. Now, the momentum, this bullish momentum, is fueled by growing expectations for a June rate cut by the Federal Reserve. The Fed chair spoke last week, emphasizing that it is very likely that they will be cutting interest rate 3 times this year, 25 basis point, 25 basis point, 25 basis point, making a total of 75 basis point. With the idea that inflation is gradually reducing to their target of 2%. But from the look of things, it appears that inflation is still sticky in the United States. We saw the release of the U.S. Personal Consumption Expenditure Price Index, which is considered as the favorite inflation gauge for the Federal Reserve, which came in a little bit higher than expected, giving us an insight into how sticky inflation is. Now, this of course has reinforced market conditions of potential of interest rate left higher for an extended period of time. Now, this ongoing anticipation keeps the US dollar under pressure, thereby supporting safe haven assets such as gold. Now, another factor we cannot ignore here is the persistent geopolitical tensions arising from prolonged Ukraine-Russia war, and of course the Middle East, the Israel-Gaza situation, which usually incite appeal for safe haven assets such as the gold. Now, given these factors, the path of least resistance for gold is still looking to the upside. So will price break out of this all-time high again, or are we going to be seeing some retracement move happen before that happens? Now, there is a psychological expectation when price action finds a new high. So it's always expected that when price finds a new high, it takes some time before price acclimatizes to this area. And during this time, we usually see the emotions of fear become dominant, as those who are taking advantage of that bullish momentum right into this fear want to be taking some profit off the chart, and this usually reflect on the chart as a retracement move, choppy market conditions, or a consolidation phase. So we are going to be taking this into consideration while we review the technical details on this chart. And another thing I would like us to also take into consideration is that we may likely see a subdued trading activity today due to the Easter Monday, as major markets will be observing this holiday. Now, looking at the chart right now, it is obvious that the market started the week on a bullish note. As you will see, price started at around the $2,235.50 level and culminated at the 2,265 area, where we have seen a barrier for buyers at this point. Now, this area here, what I'm looking out for at this juncture is to see how the market is going to be reacting to this highest point. How we're going to see a reversal pattern from here to incite a retracement move, that is profit-taking activities to the downside, maybe into the ascending trend line we identified in my weekend video. So I'm not doing a top-down analysis on the XAUUSD today because I already shared my weekend video on this particular asset. So if you missed out on that weekend video, you can check the link in the description box below to furnish yourself with a background knowledge of how we got to this point, or you can check my Telegram platform. You will find the link to the XAUUSD there. So one of the things I'm looking out for here is a reversal pattern, if like a double top structure, head and shoulder pattern, or even a rising wedge, then we will sell the breakdown retest of the neckline of that pattern. However, if the contrary is what happens here, and instead price action continues to find new highs, like evolving into an uptrend continuation pattern, maybe a flag pattern or a pennant or any form of uptrend continuation pattern, well, the breakout of the resistance line will be all we need to join the uptrend continuation. So at this point, I have a buy stop order above the $2,265.50 level to capitalize on the uptrend continuation. But if a reversal pattern forms here, then we have no other choice than to look out for selling opportunities, then add more sell positions if price goes ahead to break down the 2,235 level. So the reversal pattern or uptrend continuation pattern may take about 24 hours to mature. Remember, today is a public holiday and most major market will be observing this holiday, so they will be closed. So we are likely going to see subdued trading activities around this area. So let's wait patiently, and of course I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So this is my simple view on the XAUUSD today. I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So I hope I made myself clear today, but if you have any questions or you need some further clarifications, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds off to see if there are any questions whatsoever before we start rounding off on today's Forex Morning Mastery. And for those who are yet to click on the like button, please do so. It goes a long way in helping the YouTube algorithm to promote the video to a wider audience of traders who may find the content beneficial to them. And thank you very much as you do so. For those who had clicked on the like button, thank you very much. So let's see if we have any questions before we go ahead to round off on today's Forex Morning Mastery session. See you guys soon. All right, so in the absence of no questions, I want to assume that we are all on the same page. And it's on this note, I think we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. I really appreciate every single moment I had with you. High ticket investment, trust knowledge. I see your comment. All right, thank you very much for that feedback. How there. So today we were able to take on 3 financial assets which we are going to be monitoring for this week, which includes the USOILSPOT, the USDJPY, and of course my favorite amongst them, the XAUUSD. And on all of this asset, we were able to identify simple trading setups that we will be using to guide our trading decisions for this week. And I do hope you marked out those levels accordingly on your chart. If you have done so, well done to you. Kudos to you. So all we need to do is exercise patience and allow the structure to mature. And always remember, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So in that regard, you want to be having a well-defined risk management strategy in place. For those of you who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. Trust me, the more time you spend with us, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So I look forward to seeing more of you same time on Wednesday morning, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing and of course prepare ourselves for Wednesday's trading session, which promises to be another exciting one as we have major macroeconomic event from both the United States and the Japanese economic docket to look out for to guide our decisions for that day. Until then, I will always be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due. So it's on this note, I would like to wish us all the best of luck today, and trade smart, trade consciously, enjoy your weekend, and enjoy your holidays, and do have a wonderful evening, everyone. Bye.